Hello friends and welcome to my YouTube channel Simply Stocks, and today I am going to bring to you 5 stocks from the small cap division that could do a lot of things over the next 5 years and can end up making you a lot of wealth. So let's understand which are these 5 stocks and what you need to do. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about these 5 stocks, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel and help me bring you such analysis and companies on YouTube, and it will also help you ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up every day. Even today I have put up a podcast on Kilpest and on the markets. If you have detailed market analysis and you want specific stocks to be analyzed just for you, you need to directly email me, and probably you can talk to me after we work things out. Now, the criteria for choosing these 5 stocks, they are established brand and strong managements, even though they are small cap businesses, but they are very renowned brands in their own space, and they have a unique, you can say, leadership in their space. Whatever products that they are selling or services that they are selling, the brands are strong, and management is perhaps the top class according to my understanding. Now anything can go wrong going forward, but according to my understanding, the management is top class. These are diversified yet market leaders in their space, as I mentioned. Low debt or virtually no debt, and absolutely no pledging, so no issues of any trouble with pledges or heavy selling to come in because of corporate reasons, etc. Strong institutional holdings, or at least strong promoter holding, would be there. Solid return ratios and numbers are pretty good over a 8 to 10 year period. Maybe the last couple of years have not been great for some of the companies, and that's why the stocks are coming at reasonable valuations. But over the last 7, 8, 10 years, the return ratios and numbers have been extremely solid. So the allocation part, what you need to do is probably put 20% in each of these stocks, or if you can mix it with 5 of your steady stocks of large caps, that would be even better. Then you have to put in 10% on each of these 5 stocks and buy over the next year whenever the market falls, whenever there is absolute mayhem in the market and the market falls 5-6%. And normally it does in a week or 2 weeks time in sharp corrections. So that's where you need to get into these stocks. Over the next year you'll get opportunities, probably 4 or 5 opportunities, and do that. Hold for the next 6 years once you complete your buying, and it should grow between minimum 20% like kind of thing. So this is something like a, you can say, high risk high reward kind of investment, that you have a 30% risk. So that's why there's a 30% stop loss from your average buy price. Do not go beyond that, because these are small cap companies, micro cap companies. Anything can go wrong and you have to save your capital. So that's my opinion. Keep a 30% stop loss, and maybe in 6 years time at 20-22% CAGR, you'll get a lot of return. So the first stock in this pick is OPALA RG. OPALA, one of the biggest brands in glass, you can say crockery, etc., and decorative, you can say crockeries. It is a market leader in that space, have been a marquee brand for many years. So you might understand that many of you would understand that parents of yours and grandparents of yours would have been talking about OPALA and its products, and it has been in India for the last 40-50 years and have been doing well. Strong management. There's very high promoter FII and DII complete combined holding with only 8% free float. I talked about OPALA at 130, 140 as well a few months back, I think 8-9 months back, probably a year back, and it has run up from those levels. Currently it is near its highs, 10-15% down from its highs. So wait for major declines to get into the stock. Over the last 2 quarters results have not been that great, but over 8-10 years time frame, It has produced stupendous results, and the stock has moved from 2 3 rupees say 8 years 10 years back to something like 250 rupees. So 100 bagger it has already been. It is the best opportunity to accumulate on declines, and the market cap of the company is only 2500 crores. So people, basically this presentation is for those who wanted small cap stocks, who wanted small cap, you can say picks, which can do really well. And this is one stock which is more stable in nature, and over a long term 5 6 10 years could give you very good returns. Yes, over 1 or 2 years it might disappoint you or might not give you decent returns, and that goes for all the stocks that I'm talking about here in this presentation. Second stock that I want to talk to you about is Tasty Bite, and it has come into my multi-bagger picks for 2 3 times. Is I think the third time I think it has come in, and at 10,500 rupees it looks attractive. Any decline below 10,000 is a very good opportunity to buy into the stock. Yes, because of the pandemic that is again surging in UK and Europe, the problems will persist probably for the next 2 3 quarters, and the stock may go to 8,500 9,000 levels. uh, the best thing to do is wait for declines even from these levels, to buy maybe 10,000 or less than that, and keep on buying on declines. And then when your final average price comes out, say 9,500 or 10,000, keep a 30% stop loss from there, so your stop loss becomes 7,000, and just hold on to the stock for the next 5 6 years. The market cap of the company is under 3,000 crores. I won't be surprised if this becomes a decent mid cap stock after a 6 to 8 year period. This is a very decent company with very low debt or virtually no debt, high promoter holding of 74%, strong stock, high return ratios, absolutely debt and pledge free, you can say. There's only working capital debt, so a decent company, and there is very less movement in terms of you can say volatility for the stock. Yes, the notional price is high, but if you have some amount to invest, you can buy a few shares of it. It's about returns in percentages that you should look for, and Tasty Bite could give you good percentage returns over 5 6 years. The third stock that I bring to you is Mahanagar Gas, and a lot of people are talking about it. I believe that the storm will pass by. The problem that took place just recently is the fact that ONGC and the upstream companies will have their own say in terms of pricing. There is a chance that government will end up, you can say, relaxing pricing norms, and prices can be independently made for upstream companies, and they can do that. That will have an effect on Mahanagar Gas and IGL and Gujarat Gas, but at the same time MGL etc. might also increase prices and pass it on to the consumers. The brand is good, and the kind of distribution that these gas distribution companies are doing, it is gaining traction every year, and over 5 6 years it will become even bigger. The market cap of the company in terms of the kind of business that Mahanagar Gas does is extremely small with 8,500 crores. I won't be surprised that later on, I don't know when, but sometime in future it should be 30 40,000 crore market cap company. uh, at around 800 850 rupees it is attractively priced. You need to understand that it is a government company, yet very well managed, completely debt free. It is a market leading brand. In fact, there are only two brands in this space, and whatever MGL offers is perhaps a monopoly in its own sense. It has come to attractive valuations, the stock, and hopefully it will be a top performer once the things turn around. So let's see, after Mahanagar Gas, which is the fourth and fifth pick that I have in my list of these small cap, you can say gems. One thing I want to say here is keep strict stop losses so that you don't get, you can say, blanked out by any of the stock, and you have money to survive, because these are small cap companies after all. And if small cap index turns around 40 50%, then these all can be down 60 to 70%. The fourth pick in my list is VIP Industries, and it did come into the list in March, April as well. If you take my multi-bagger pick for April, and from those levels, it has run up something like 70-80%. But I still feel it is attractively priced at the moment. It provides luggage and travel accessories, and you need to understand that even now traveling is not become that popular post the pandemic, and people are traveling, but the volumes are not that great compared to what it was a year back. And I feel after 6 months things would be totally different. I don't think this will continue forever, the pandemic thing. Probably next 6 months it should come down to decent levels. So it provides luggage and travel accessories, leader in this space. It has six brands, namely Aristocrat, Skybag, etc. And this can be a proxy to travel and tour industry. So rather than buying hotels which have high debt, rather than buying something like airline companies, etc., which have ATF and other things going on with ticketing and so on and so forth, you can buy this and play that airline theme as well and travel theme. And this is a relatively less debt company, although there is debt in the company, but it is manageable. So I believe that current valuations are also attractively priced to buy. Yes, we could see a decent decline, so again wait for massive declines to buy into such a stock, and then just wait it out for 4 or 5 years. The rewards could be pretty good. And the final pick in my list is a pharma company. Rarely do I suggest pharma companies as a very good long-term pick, and this one has caught my eyes, Caplin Point, and it's not moving a lot. It has moved from the lows for sure, and around 500, 550 looks decently priced. Probably declines to 470 would be even better. One of the better small cap pharma play. Expansion completed, have you can say started exports to Americas. So they basically do most of their exports are in South and Central America rather than USA, and there the margins are even better. That's what the management came out and said, that their margins are pretty good there, and they have started doing that. Expansion process is virtually on a completion. There's high promoter holding, and whatever vision management came out with about 2 3 weeks back on television, I liked that, and it looks like the company is on the cusp of a major, you can say, move in terms of stock prices and the business itself. So high return ratios, ROE of over 30% for the company, which is unheard of in the pharma sector, but this one produces that. Reasonable valuation, stock is consolidating, so any declines closer to 500, 520, decent levels to buy into. Most of the pharma companies do not have debt. This one also don't have that debt. Only working capital debt is there, no pledging, and the market cap is only 4200 crores. And that's what I like about this company, that the market cap is not in more than 10,000, 20,000 crores. This can give you good 18-20% CAGR over the next 4 5 6 years, even more. We have to see how the numbers pan out over the next couple of years. Can buy at current levels, but I would wait also for declines because the market has surged. So this was my video on the multi-bagger. Please subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thank you.